Welcome to Earnings Intelligence. Today, we're diving into Warren Buffett's 2022 letter to shareholders. And look, this is way more than just a pile of numbers. It's really a masterclass in a simple but pretty radical way to think about investing. So let's see how it all works.
First, wow, take a look at this number. That is Berkshire Hathaway's total gain from 1964 all the way to 2022. To put that in perspective, the S&P 500, a benchmark for the whole market, was up about 24,700% in that same time. So, how is a result like this even possible? The answer really comes down to a fundamental shift in thinking. And that gets us to our first big idea, the business picker philosophy. Seriously, their entire strategy really hinges on looking at the stock market through a completely different lens than most people. And here it is, straight from the letter itself. This is the core idea. Buffett is so clear about this. They don't buy stocks, they buy pieces of actual businesses. Now, it sounds almost too simple, right? But that one little distinction, it changes absolutely everything about how you make decisions. So what does that really mean in practice?
Well, think of it this way. A typical stock picker, they're totally obsessed with the daily price, what the market sentiment is, what the news is saying today. But a business picker, they're playing a different game. They're focused on how the company is actually performing over the long haul. Its competitive edge, the management team. They are not thinking about selling next week. They're thinking about owning this thing for decades. Okay, so let's see how this philosophy actually shows up in the numbers. This way of thinking doesn't just guide their investments, it actually shapes how Berkshire reports its own financial results. And it creates what Buffett himself calls a tale of two earnings. And what you're seeing here is just fascinating. On the right, you've got the official accounting number, what they call GAAP earnings. And just look at those wild swings. A positive $5.5 billion in the first quarter, then bam, a staggering loss of almost $44 billion in the second. It's just all over the map. But then you look to the left at what Buffett calls operating earnings, and they are remarkably steady. And this is why Buffett comes right out and says it. He's adamant that the official number is totally distorted because it includes all the paper gains and losses of their massive stock portfolio. He basically says it's just market noise. So you're probably wondering, what exactly are operating earnings? It's actually pretty simple. They just take that official number and they strip out all the unrealized day-to-day swings in their stock investments. What you're left with is the actual profit that's being generated by the businesses Berkshire owns. The railroads, the insurance companies, the factories. That's the true measure of how they're doing, totally separate from the whims of the market. So that brings us to the next logical question. If operating earnings are the real report card, what were the key ingredients that actually went into that secret sauce for 2022? Well, in 2022, a couple of big moves really stand out. First, they went out and bought another entire business, an insurer called Allegheny Corporation. Second, they bought back their own stock. And you know what? Both of those actions do the exact same thing. They increase Berkshire's ownership stake in productive money-making assets. It's a classic business picker move. And that Allegheny deal in particular brings us to a really crucial concept. This number, $164 billion. This is the size of Berkshire's insurance flow at the end of 2022. It is a massive, and honestly, a pretty misunderstood source of their power. And it grew from $147 billion the year before, thanks in part to that Allegheny deal. So what on earth is float? Let's break it down. The statement is simple. It's the cash an insurer collects from premiums that it hasn't paid out in claims yet. Okay, the translation? It is a giant pool of money that doesn't actually belong to Berkshire, but that they get to hold onto and invest for themselves. And the analogy is the best part. It is literally like getting a giant, zero-interest loan that you never have to pay back as long as your insurance businesses are run well. This float is the fuel for so many of their other investments. All right, and that brings us to our final section. And honestly, it might be the most powerful one. It's where this whole philosophy ties together with a huge lesson in patience. Let's talk about letting your flowers bloom. This just illustrates the point perfectly. Berkshire finished buying all of its Coca-Cola stock way back in 1994. That year, Coke sent them a dividend check for $75 million. Pretty good, right? Well, fast forward to 2022. Without them lifting a finger, doing literally nothing else, that same annual dividend check had grown to $704 million. All they had to do was buy a great business and then just hold on.
And here is the golden nugget, the ultimate lesson from this entire report. Buffett fully admits he's made tons of so-so investments over the years. He calls them the weeds. But in the long run, they just don't matter. Why? Because a few huge winners, your Coca-Colas, become so ridiculously profitable that they make all the little mistakes totally irrelevant. The goal isn't to be right all the time. It's to be really right a few times and then have the patience to let those winners work their magic.
So we'll leave you with this question, and it's inspired by Buffett's own mentor, the legendary Ben Graham. He said that in the short run, the market is a voting machine. It's a popularity contest. But in the long run, it's a weighing machine. It measures the real substance, the real value of a business. It's just a powerful reminder to maybe think a little less about the vote count today and a lot more about the actual weight of what you own. Thanks for joining us.